It's not about picking stocks. It's about picking the right portfolio.
Top rated question here, Bill from South Carolina. Just a quick process question. When a position is at your minimum allocation and now neutral trend, what do you look for to add back to your position or get out altogether?
A non-neutral trend. I would like to see immediate term trade strength. I would see something that, the first thing that turns back is it going from neutral to bullish. Not, when it goes from bullish to neutral, the probability is rising that the next thing is bearish, right? So it's not a lower price. So it's not, when I said to Jimmy, the answer is buy the damn dip. Not one of these things is gold, right? Didn't buy one iota of gold. And it was down a heck of a lot more than these things were, okay? Not a heck of a lot, but you see what I'm saying. So I'd just like to see some stabilization. I'd like to see the trend hold. And then what I'd really like to see is an immediate term trade recovery in the thing. And by the way, the immediate term trade line does move. So it's come down. I think it was 1945. Now it's 1932 for gold. Recapturing 1932, if it holds 1817 and then gets above 1932, let's go to slide, the former slide 9. I'm not trying to be Purple Rain or Prince here, the former guy known as himself or whatever. This is still the right slide. So what's happened? What I'd like to see here, Emma, is like, okay, you had gold up until May, I think, was this. It was, everyone loved it, right? It went to an all-time high pretty close to that. Then, most recently, it's called this the 1932 line. 1932 broke, so that just goes to, now it's bearish from a trade perspective, and it's trying to hold 1817. If it were to hold 1817 and start to do this, and this, by the way, this 1932 line is going to change, and then recover, I could go from a 1.5% position in GLD to 6. But I would wait for this. I'd wait for that to be confirmed. Hold the trend, get back above the trade. These things, to me, are really easy to understand. Like, again, I as you know, on client calls, sometimes I struggle, less so on client calls, because they're institutional client calls, so they kind of get it. But most people do, but some people don't. The hardest thing to do as a coach is communicate what's in your head to getting it into your head, right? Like,
Yeah.
So hockey, there's a game that we both know, so it's easy to communicate.
Yeah.
But when I try to, I made this up. I mean, like, these people, a lot of people in our community are like, well, I look at the 50-day moving monkey. I don't look at the trade line. I look at the moving monkey. You know, it's like, that's the problem, right? So you think you see something, and I'm like, I see an opportunity to score a shorthanded goal actually here, because we know how to pick, Emmage is going to pick off that power play pass, right? We're playing ahead of them, right? That's the moving monkey, you front run it. So to get you away from doing that, where you think it's breaking down on a Fibonacci thing or something like this, and to get to where I'm at, that's pretty simple. I just do what I do. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.